Well, Aaron, thank you so much for joining me. I know you guys are busy with a lot of exciting new launches, and the market's finally starting to pick up, I think, where it left off. And I really appreciate you being here. For those of you who are joining us, Aaron Millar is the Chief Sales and Marketing Officer at Marlin Spring Developments. We're really here to talk about, I want to talk about a few things. I want to get your take in the market, kind of how you're seeing buyers, and what's working and what people are looking for. But what really I'm excited, obviously, to talk about and learn more about is 316 Junction, which is your most recent, I guess maybe not most recent. You've got a few little launches in the pipeline, but the project that I'm most excited about, where I know a few of my good clients have already invested, and I'll be investing in as well. So I'd love to just get in there and start chatting about, first of all, what's happening in the real estate market today? What are you seeing?
Yeah, Ryan, that's a loaded question. It's a big question. And I wish I had all of the answers, but I think as we continue to navigate the interest rate environment, the inflationary macroeconomics, that things are constantly changing. But we've been quite fortunate. Marlin Spring has a lot of either existing inventory in the marketplace currently, and we've gone through a couple launches in this market. So we're well positioned right now to have a really strong understanding of what the market fundamentals are that are driving projects to success. We've got a couple sites in the last year. We've launched 3 different projects. All are in different submarkets of the GTA, but have really given us some great perspective. And I think one of the key pieces in terms of what we're seeing and the types of projects that we're bringing to market are really fundamentally tied to location, the growth proposition, and as well as the value proposition. So those 3 coupled together, if we can hit the mark and bring out those particular projects that have those fundamentals tied to them, we're seeing great success. And jumping forward, projects like 316 hit the mark in terms of those 3 value propositions. So I think from a portfolio perspective and the project that we're talking about today, I think it's really well positioned to meet what is saleable and kind of what is in demand in today's marketplace.
Yeah, and I think that's a really important thing, because there's that, there's an element of focus, and there's so many different opportunities out there, and there's a lot of things being promoted, and most people that are actually buying are investors. So what's really important when you're investing into a condo, you want to look at the fundamentals. And I'm not going to get into all the fundamentals, but on a high level, you want to see, is there job growth? Is there low supply but demand for people moving to the area? Is there transit? Is it a trendy neighborhood, an up-and-coming neighborhood, and all those different things? So, I think that's really important, and because there's a lot of options out there, and I just don't think many of them are good for the long-term investor. And that's why we're here to focus specifically on 316 Junction, is because I think that's really where I think a great opportunity for investors is. It's interesting. It's like, a month ago, I'd go to a sales center on a weekend and it was pretty quiet. And now you're waiting in line and there's a whole bunch of people with money orders or paying traps ready to buy condos again on the right sites, right? So it's like this whole shift. And I always have found, like, this is the most cyclical thing I found with real estate over the last 20 years is, and we've had so many ups and downs. And the important thing is that the big picture, it's always been very positive, and the incremental pictures have always been very positive. But within those small incremental markets, there's some volatility, like anything. And it's always interesting because I can see it when people start panicking to sell assignments. They're unloading their condos because they just don't want to deal with real estate. It's scary. And then you start seeing groups of buyers coming in and buying up all the assignments. So we started seeing that. So it's very difficult to get a good assignment deal now. And then what happens usually after that is I see the resale market start to pick up. And we've seen that now probably for the last 4 months. I mean, I was just reading, the last 2 months we're up 7.8%. So I think it's 4% last month, 3.5% roughly, 3.8% the month before. And we've got now consecutive months of growth on the resale side. And then typically what happens is then the pre-construction side picks right back up. And it's just like clockwork, as we're seeing that again right now with everyone trying to get into these different opportunities.
Yeah, and it's interesting. I mean, kind of to that point in terms of, the pre-construction market is so unique because you're in a sense, you're buying futures. You're looking at a product that is delivering, could be 3 to 5 years out, depending on the scale of the project. So it's also, I think a lot of the opportunity now lies with the recognition that despite there being a semblance of launches happening and the market being highly active, we're actually undersupplying the market to a really significant degree, which, right now you might think like, I'm not sure, a headline says X, I'm not sure what the interest rate environment looks like. I mean, even though it's downward trending, and despite, the implications of June 7th, I think the trend will continue to be a downward pressure on, the fixed mortgage rates as we look forward. But really, if we're looking at project completions and if they're launching in this calendar year, the sales cycle is a little bit slower than we might have seen in a really, really hot market where developers can go into the ground in 6 months, 8 months. Those timelines are being dragged out a little bit because the absorption takes a little bit longer. So even the projects that are launching, the construction starts could be anywhere from, depending on the project's success, 8 to 14 months by the time it gets in the ground, which then pushes out your completion date, or what we call, I guess, from a buyer perspective, your occupancy date further out, be it 2026, 2027. And all of a sudden you look at the inventory that's going to be available in those calendar years, and it's heavily depressed. So if you intend on, taking advantage of a market where there's very, very tight supply and is still, the fundamentals of the GTA are that there's going to be very strong and high demand, particularly years from now as we hit our immigration projections, that's a great opportunity. So a lot of people, you need to think not about is now the time, is delivering and taking possession of a unit, 3 to 5 years from now, a good opportunity. And I think that's where the focus needs to be, and the understanding of the value proposition that exists, especially now when you can walk into a sales office and, you can talk to an agent and you can take an appointment for an hour and make really educated selections and get the best value proposition possible in today's market. Because you're not in a heavily weighted competitive environment. I mean, it's still competitive. It's starting to grow. Like you said, we're seeing it getting there in terms of, the urgency and the lineups, but there's still an opportunity to have access and to be able to purchase very early on in the sales cycle, which in extremely hot markets, we all know is an opportunity that's afforded to very few, mostly friends and family.
Absolutely. Yeah. It's interesting. And to add to that, what's fascinating and new to me is I'm seeing a lot more, probably my number one demographic of buyers right now are parents actually buying for their children to secure their foot in home ownership later down the road. And I think that's because people are starting to acknowledge the reality of the real estate market, that, there is a very big supply and demand issue here. It doesn't look like there's any real fix in place. And if it is, it's many, many years down the road. And to be honest, I mean, if you look at any other old major city across the globe, this is a very normal thing where real estate becomes tougher and tougher to build. There's less supply, more people move into the city. And then real estate, the majority of people living in the city end up becoming tenants because they can't afford. So that's why I think there's a unique opportunity right now where I am dealing with more end users and people buying for their children. So options are definitely good to have.
We find, interesting enough, for a project specifically like the Junction area, and the Junction tends to be heavily weighted to either rental inventory, kind of mid-rise products. So there's not a ton of inventory in the Junction neighborhood. And in addition to having, a strong proposition for investors, be it by way of, the high rental rates that we're seeing in that particular pocket, the really strong resale values that happen in that pocket, they tend to appreciate quite nicely over time in the Junction. I think that's a combination of the types of buildings and also just the lack of inventory in that particular pocket. And then there's also a huge component of, demographically, we're moving into a downsizing environment too, where it's not just people buying for their kids and people buying for the next generation. There's a lot of low-rise housing in the Junction area, and you're getting the 50 plus that are looking at maybe, their kids have gone off to school and I wanted something turnkey. I want to spend some time in the sunshine in the winter. I don't want to deal with the Toronto winters. I want to be in the neighborhood. Where can I be? And what kind of product suits my lifestyle? So it's really that kind of area that hits a multitude of demographics and the needs and the wants of the various stages of life, which is nice.
Yeah, for sure. And you know what? I mean, look, there's opportunities for me to go in and work with a developer, a team like you, and try to do a deal. And that's what I've done. But I've looked for a deal where there's actually a really good opportunity. The things that I identified is exactly what you just said. I mean, there is a tremendous amount of demand for people to live in this area, to buy, to rent, but there's very little supply. You don't see condo towers being built. It's a very transit heavy area. There's a lot of jobs in the area, but there's a lot more jobs coming with the new Hines development and another few projects. So, that's what I think makes this a very unique project versus the other projects that are out there currently. Um, yeah, the high rents are crazy. Like, so when I find a project like this, I'm like, okay, I think there's an opportunity here. Meet with you, we chat about, the deal, I learn about it, and then I go and do my own market stats. You guys provided some really good ones as well. I've come up with numbers that are just like staggering to me. So
I was even shocked because as we were bringing this project, as we were bringing it to fruition and bringing it to market, we did get some really strong comparables in terms of some purpose-built rental that are happening in the neighborhood.
crazy.
And the rates there, I was
in front of me. Like I've got a financial pro forma that I'm going to send everyone because the numbers are insane.
yeah.
I got my TREB data here, trying to make sense of all of it. My Urban Nation data, it's all here. I don't have that rental data you're talking about because that is the most interesting thing. I have it somewhere, but yeah, sorry, go ahead. I'm going to cut you off, but yeah, it's remarkable.
It is. And you look at the quality of the building that we're bringing to market here, and in terms of the finishes and the types of amenities being offered, and it's a really, sometimes our purpose-built rental, it could be hitting a different segment of the market, but here, because of the finishes and the quality of the build and the exterior architecture, we're really hitting the mark in terms of offering a very elevated, comparable product to what we're seeing in the Junction area.
Yeah, and I took the average rents per unit type for all of TREB, like on the resale market, which includes new buildings, old buildings, and the rental story is still extremely strong for this district. But what's really interesting, I literally just had the chart, is when you look at the rents in the building, the Campbell directly across the road from 316 Junction that was just completed, their rental rates are staggering, and they're renting these units. I mean, one bedroom's as high as $2,800 a month, two bedrooms in the 3,000s.
Yeah, even some running into the 4s and 5s, depending on the orientation and, if you've got outdoor space or not. So they're extremely buoyant rates that like obviously bode well when you look at our end prices and the value proposition right across the road, obviously.
Yeah, and I love that. And so like I analyze these opportunities, and this is how I always approach like a deal like this, where I'm going to get a lot of my clients involved, I'm going to invest. And you look at the rental numbers in Toronto, the rent to price sometimes makes it difficult. The cash flow. So I don't talk about cash flow the way some people do, because cash flow is not the road to building serious wealth. It's really capital appreciation. So let me just kind of extrapolate. If I were to buy, this condo here for, $700,000 in 316 Junction, I believe it'll be ready in probably over 4 years, but let's just say 4 years. And the market over the last 45 years has gone up 6.5%. The last 15, it's 7.5%. So let's just say it goes up 7% a year. That's $50,000 a year. So in 4 years, when it's ready, I take out a mortgage. I've just made $200,000. And then when I actually take out a mortgage, I can convert that appreciation to cash flow.
Right.
So that's been like my secret. And people talk about cash flow a different way. So today you're not buying a condo, you're putting down a deposit on a highly leveraged, highly appreciating piece of paper that is gaining full leverage because there's no mortgage, and it's appreciating. And then when you take out a mortgage 5 years ago, you've got all of this price appreciation. So you're actually cash flow positive, whether it's through monthly rent or refinancing and pulling out hundreds of thousands of dollars without paying taxes on it. You could do it that way. But what was really cool about these numbers, because I haven't seen rental numbers like this, is that these, from what we've seen, I'm going to go through them all again before I send them out to everyone, just to make sure we use conservative numbers. We always do. A lot of these units are going to be cash flow positive from day one, which means someone who buys today in 4 years can actually refinance, pull out a couple of $100,000 to go buy one or two more condos, have cash flow a little bit negative, but they could use the money they pulled out, and they're in a very good cash flow position. So this is a really unique opportunity due to cash flow and appreciation, which is cool.
Yeah, and I mean, I think the market conditions such are like right now are also such that like we're able to extend our deposit structures. Like our lenders are really generous right now in terms of like the terms that they're giving us for financing qualifications. So in a project like this, we're lucky enough to have a highly extended deposit structure where literally it's 5% a year over 3 years, basically. And then in addition to that, we laugh a little bit because we call it a bit of a preferred return right now. In the last 2 years, interest rates have been so negligible that, you give a deposit to a developer and you're getting 0% interest on your deposit. And you're like, well, what if I do something else with that money? I can make X percent, I can make Y percent. Now with the interest rates, I mean, the mild benefit of having that money with us is that we also have to pay interest on those deposits. It's not quite the overnight rate, it's a little bit less, but there also is that assurance that you're getting that not only is the appreciation in the unit value, but you're getting a mild preferred return because your deposit's also earning interest as it sits with us. So it's a little bit of a double dip on the investor side. So with interest rates like this, I mean, I guess the silver lining is that you do make a little bit of money on your deposits through the course of the years up to completion. So.
Fascinating. Yeah, that's cool. I bought my first condo in 2004, I think, and I remember closing and I had like $6,000 or $7,000 in interest that they.
Yeah.
Just like that's really cool. Yeah, no, that's interesting. I love that. So what else could you tell us about? I mean, obviously, this building, the area. Like, why is there so much demand from people to move, to buy, and to rent in this neighborhood currently?
I think, it kind of goes back to something we touched on earlier. I mean, it's obviously the story of supply and demand. The Junction is traditionally mid-rise buildings running up maybe 8 to 10 stories in height. This one in particular is 28 stories. So the nice thing about that is you do get clearance. Your sight lines are astounding. You'll get city views. You also have the rail on the north side, which gives you protected sight lines even facing north. So there's a great proposition in terms of sight lines and the protection of those sight lines over time. This value proposition, we're very, I think our acquisition strategy is very much tied to modality in a particular neighborhood. So when we look at like kind of the Dundas West Junction corridor, not only do you have access to subway via the Dundas West station or the Bloor station, the Lansdowne station, but you also have access to things like the Up Express. You've got streetcars in close proximity. You've got, cycling infrastructure that is, incredible. You've got the whole redevelopment of the Davenport Diamond, which is Campbell Park's going through kind of a renaissance, and that whole underpass component because they're building out additional infrastructure to support the GO line, and then introducing a new GO line on top of that. So the amount of infrastructure and the amount of money that's being put in through government into this particular neighborhood, not only is it what exists in place that makes it great from a modality perspective, but the future modality that's coming to the area. I think it's Metrolinx is aiming for, I want to say a 2.5 year completion for that. So the tie-in to the completion of this neighborhood would be amazing. And then we talked a little bit about some of the buildings in the neighborhood, an incredible Toronto Public Library coming right across the street from this site. So again, a lot of investment from government sides to make this a true community. And that's really unique. You get, the nice thing about the Junction is, you can live in these beautiful buildings and in these neighborhoods that are truly community. It's surrounded by a lot of single family homes and a lot of owner operated shops and restaurants. And it creates an energy that is, I personally feel is slightly unmatched by other locations in the city. I'm a little bit biased because I do live in the Junction. So, I might appreciate it in ways that others don't, but it is really a great marriage between proximity to the city and your capacity to be in the thick of things. I mean, I work at Yonge and Eglinton, and I'm here in about 30 minutes from, I'm a hop, skip, and a jump from the Campbell. I can take the subway if I so choose on random days. And, I'm even thinking about biking to work, but I haven't quite got the right outfit for that yet. But a lot of options that make this area really special, really unique, but also you don't lose the true investment propositions that exist in, be it more like concrete jungle types of locations. You've still got the transit, you've still got the growth proposition, like you said about Hines, a huge amount of office and retail infrastructure just coming right down the street. So you get all of the benefits of what the key investment propositions are, while also getting the beauty of a community style of living. So I think that makes this location really special.
Yeah, I agree. I'm actually in the market. I sold my home.
I have a condo for you. I said I have a condo for you.
It's too far out for me to live, but I will get one. But I moved to Queen West, where I had an older one that I was renting out. But I am looking now in like the Junction area, because it's just like, it's where I spend most of my time. I was at a restaurant there, I think 2 nights ago, and the week before. Like, it's just such a great vibe and great trendy area. I love it. Definitely. One other thing that I don't know if you guys saw this when I was pulling data, which I found really, really interesting, is when you take the average price per unit type on the resale market for condos in W02, this district, and you look at the one beds, forget the exact number for the one beds, but they're not too far off from what the average is that you guys have available. But when you look at the 2 bedrooms, the average 2 bedroom in the last 60 days is $915,000. Mm-hmm. And that's made up of old condos and new condos. And you and I both know that older ones drive down that average further. So if you're just to use a data set of new ones, then the average will be much higher. But what's interesting is you guys have given us an exclusive allocation. Thank you. So we can work with our clients on that. But when I looked at our allocation, I'm looking at the average price for a 2 bedroom is around, it's like in the low 8s. So I think this development has created a tremendous opportunity for young families, whether they come in and buy or rent later, to be able to afford to live in one of the more desirable, trendy neighborhoods.
Yeah, you're definitely right about that in terms of like the price points and also the days on market. It tends to be, the inventory tends to get scooped up quite quickly in these particular neighborhoods. So again, it's not just, it's not just the price, but the fact that they're going for lists, they're going over ask, very desirable neighborhood in that regard. You've got a High Park in close proximity, which is beautiful, walking trails. And this particular building, again, at 28 stories, it is quite unique to have something this tall in that neighborhood. And it's allowed us to create these great stacks of units that, we've given you a few really special stacks for your clients that are efficient units, really well priced, and are hitting a particular price point, I think, that is really difficult to achieve in this particular neighborhood. I think it's just that it's the scale of the project that's allowed us to create this type of value proposition for clients.
Yeah, we've looked at the average prices for the other available projects, and this is the most aggressive for sure. So, lots of opportunity here. I love Marlin Spring. I invested with Marlin Spring, as you know. I had 3 recently close in stockyards, which turned out incredibly well. I don't. The word luxury gets thrown around a lot, but then when you're buying a Marlin Spring condo, you're buying something that has very unique and stunning design and architecture, and standard common areas and standard finishes that are just well above any other standard. So you can almost say that it fits into that kind of luxury or middle part of the market. So I think that's also why I did incredibly well when all 3 of my units I refinanced as soon as I got them rented, refinanced. I pulled out a lot of money, which I redeployed. But just amazing projects. I'd love for you just to go into detail about the details with this. It's obviously, when you look at it, it's an architecturally stunning, unique, which is important. And I think that's what also helps resale prices and rental prices. I'd love to hear more about that.
Yeah, I mean, a little bit just about Marlin Spring. Just generally, us as a company, the reason why we're able to bring great quality to the market and really perform well for our investors and our end users is that we self-perform on construction. So all of our construction is in-house. We don't contract out that side. So we have a really tight control over scheduling, trades, and all of the quality metrics that go into building a beautiful building and really finishing it top notch. We've got a customer experience team that has dedicated customer experience specialists for each of our sites. So a really hands-on approach where, you'll know the name. It could be Kaylee that you're talking to for this particular project that will guide you through the process and really help answer those questions or concerns that buyers might have through the process. Because it's a long process. You've got money parked with us. We want to build that trust. We want to build that rapport and be there to answer people's questions. So a lot of things that we do internally to make sure that the buying process is one that's enjoyable and memorable for our clients, for sure. We love the Junction. We've got a huge pipeline in the west end of Toronto. So we know this market very well. To your point about stockyards, we really love that St. Clair West corridor, the Junction pocket where we're building out Campbell. This is near and dear to our hearts. And we really believe, and part of our acquisition strategy also is to focus on particular neighborhoods or pockets of the city and really build them out and try and develop a community that fits within the vision that we may want to execute for that particular project, be it how the retail comes to be at grade and how we can impact and positively influence the neighborhoods in which we're building. So really important for us, definitely, as a company.
Yeah.
This particular project, we've got about 12,000 square feet of amenities. What I really like is at grade. I know we don't have visuals to support it, but I'm sure that you can get this all to your clients through renderings and assets. But when you come in, there is outdoor amenity at grade. So immediately there's some breathing room. It's not just, like a structure that imposes on Campbell. It is outdoor space, it's greenery, it's a really inviting entrance. We've got a few live work units as well on the north side of the project. So the intention with the live work units will be such that there may be service based, definitely not like restaurant style, but it could be, it could be a massage clinic, it could be a nail spa, what have you. So built-in services at the bottom of the building, which is wonderful. The architects paid amazing attention to the detail on the exterior here. You'll see there's kind of a patina finish here that will wear and kind of age with the course of the building, really lending itself to, I think, the historic nature and kind of the more industrial nature of some of these pockets in the Junction. And we had the interior design done by Trung Lee, who's an amazing designer to work with. We were so happy to have him on this project. And he built out some incredible spaces, co-working spaces, a 2-story fitness facility. We've got a beautiful party room that spills out to a 5th floor amenity space with barbecues and lounge areas. So really thoughtful amenities in this building and really amenities that I think people can enjoy. We've got a great little dog run and a great pet wash. I know, Ryan, you have a little dog. So, always near and dear to the pet owners' hearts to make sure that there's proper amenities for the furry friends that we all have. And then the units themselves, really great finishes. I think that they really hit the mark in the sense of what you get as a standard is plenty, if not supersedes what you may otherwise be paying for in upgrades with other projects.
Yeah, absolutely.
Yeah, built-in appliances. We've got, paneled dishwashers, paneled fridges. So really elevated experiences. We've got valence lighting, soft closed doors. So even those little touches that you may not really think about at the time of purchase, is everybody asking, are the doors soft close? But, they are, and it's one of those little details that at time of completion and when you're doing your PDI, you're like, this is a really nice feature. I wouldn't have thought of that. So we like to think of those things for our buyers so that they don't have to, and they don't have to spend the money afterwards on the minor.
Yeah, it's awesome. I was very impressed with the finished product, stockyards for sure. All those things. I didn't do any upgrades, and it felt like an upgraded unit compared to usually what you get. So
yeah,
very happy with that. Well, I'll just kind of, I don't want to take too much of your time. I know you guys got a few other launches happening, and
yeah, there's always something launching.
And I'm going to go sell some condos as well. But, just at a high level, I just want to kind of identify the opportunity to any of us, our viewers. This is an exclusive opportunity where I've gone in, I've been looking at projects where I can get my group of investors, my best clients, myself, and we can look at an opportunity that's really going to offer value in today's market. And this opportunity has been identified, and the further we did the research, the further we got excited about it. But in terms of all the rental things and that we discussed, which we'll be sending out more details on, the resale prices in comparison, or the prices in comparison to other projects, are just a tremendous amount of value here. And then obviously with the location, I think there's a tremendous amount of upside. Anything that is in a job growth neighborhood with transit, that is adding new infrastructure and continues to grow, tends to be a good investment. So it has all those things. The incentives, which are really exciting and some very exclusive to us. So I know there's already a VIP price. What we've been able to do temporarily for our clients is do an additional $20,000 off, which this won't last. We've got an incredible 5% deposit structure where it's 5% this year and then nothing for another year. So 5% the next year, and then from 5% the next year. So, you know, $600,000 condo, you've got 30,000. So those are one of the big benefits of advantages of investing in pre-construction, is you're able to spread that out over a long period of time and get a higher ROI and to be able to do more in terms of having a deposit like that. And then obviously we've got the parking discount, the caps on the closing costs. And one thing that we're going to do for our clients exclusively for this deal is, I own a property management company. We manage hundreds of units, and we just love the rental market in this area. And we think there's so much opportunity that we're going to offer 2 years of free property management. So finding the tenants, screening the tenants, managing the properties. And I think that's, I'm really excited about that. There's one other thing I actually forgot to mention. So I did another presentation with an analyst to look at this project, Aaron. And in this area, there is a huge, significant increase for furnished units, even long-term furnished. But what, you know, I think is the case with this building is they don't actually have restrictions in terms of how long we can rent. So there are potentially opportunities for investors who want to do furnished rentals and increase their ROI further. So did I miss anything in terms of the incentives? I know everyone's going to get an email shortly with the details, but if you can think of anything.
Not from my perspective. I mean, I'll jump in quickly and just say that, like, you know, Ryan, the reason why, you know, we're both here today talking about this particular project is we have a great history with you and we have a great relationship with you, and it's a relationship that we appreciate a lot. And so this kind of exclusivity, we're happy to offer you and your clients. It's something that has been bred and born out of a longstanding relationship of mutual success together in the industry. So just want to say thank you from all of us at Marlin Spring.
Oh, thank you very much.
Clients are very lucky.
Thank you. That was very kind of you to say, and it's mutual. So Aaron, thank you for your time, and thank you for working with us on this opportunity. And I look forward to being in touch with you soon.
Sounds great. Thank you.
All right, thanks.